The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Got some announcements today. Durable goods and consumer sentiment, new home sales, all 8:30, and then the last two around 10 o'clock. Not a lot going on. Whenever, we have some traders asking questions this time of year, it's trading's going to be light. It's not a lot to focus on as far as, major moves going on. The statistical facts, though, are is the market generally drifts higher towards the end of the year, and that's a pretty serious statistical reference. So if you're trading, and I'm referencing the stock market in general, if you're trading, you may want to not be as heavy lately. In the last 2 weeks, it's going to be, a lot of the traders up in New York and Hong Kong and the larger hubs, the exchanges, a lot of those guys are just completely off the grid right now, and they've pretty much sewed up their books, and I think that just fantastically happened from the long side in the last week or two here. I've got crude oil I'm showing in the den. This is something that's, at least showing some basing action here, 55.11. This is the February contract. Mistakenly showed the January contract as we were kind of rolling over to this thing. So I apologize for that the past couple of days. But, they're both tradable instruments still. But February's now in play. I think January's actually off the board. Here's 55.11, and the upper highs are 60.94. So those are the big-time intermediate inflection points to pay attention to on the crude oil. And if the stock market's not completely in play right now as far as the volume, crude oil got a lot of news out with that. OPEC is, basically got the bullhorn out saying they want to try to get everybody to reduce production right now. So that inflection point, 55.11, is going to have to be paid attention to, and stops need to be oriented around there for, trying to pick the long side here and possibly reaching targets around 61 up top. But again, with all the news that is out there and all the pushes forward to try to get this thing to put on the brakes, I don't think that that's very longest considering the action that's happened around there. And breakouts and closes below this 55.11, I think are going to have to be paid attention to, and possible retracements back up into those areas. Now, if you took that attitude recently, a couple of days ago, actually, on the Thursday, we had that close below. We came back and retested, and then we powered up. That's trading, and that's what stops are for. So, again, we could have a close below, hit this profile again, get outside of the fair auction, and I'm still going to try to play the game the same way. And, the theme always is, as we talk about all the time, lose a little, lose a little, lose a little, make a lot. And those are the kind of the stop outs. You just got to pay attention to those things. We could see another ride down in this product based on everything I just talked about. And that's just the way that, trading goes. So, again, don't be shy to get stopped out of trades, and don't hang on to things, if at all possible, that are just continually going against you, especially if you're trying to continue with the short trade on crude oil. Here's the weekly situation on crude oil. As you can see, just to kind of step back and put it into perspective here. We started breaking down about 100, and we don't have any new profiles attempting to appear on the long term. And I know we're extremely far down below the current long-term profile, but again, the long-term trend's still in force down. There's not a lot of conflicting news out there, as we just talked about, to try to pick bottoms on this, let somebody else do it. And you've got a resistance point around 61, and you've got some breakouts below 55. So anything in the middle there on the intermediate long term, I'm kind of staying away from at this stage. There's probably some good day trading opportunities, but I've personally never had a lot of luck day trading crude oil, and there's been some serious movement with this intraday lately. But again, that's my take on crude oil. Euro, again, this is kind of the gift that keeps on giving. We talked about this. Here's the inflection point we really just talked about last week, 125.74, which was the gift on the long term to trail down. And now on the daily, we've actually used that area 122.73 as of yesterday. We climbed back up into there. We reached a high of 122.73. Amazing. 122.73. We reached just kind of blow this up so you can see it. And this is the similar situation on crude oil that I think you've got to probably pay attention to. Closes below profiles and go back and retesting to give you an inflection point with stops above. And that actually worked out literally to the tick yesterday on the euro. So 122.7726 was the high, and then 122.73.2 was the bottom of our box. So I mean, that's basically to the tick, and we're just drifting lower. And I see zero reasons to try to pick a bottom on this to try to go long. Here's the 240s. Hasn't really allowed you to mitigate this trade on the long side at all, even trying to trade contra trades against the long-term trade down. And, the euro, as we've talked about, is probably going to, initial targets 120 and lower on this. And if you played this as we've been talking about it, we had that similar situation on the weekly back around 135, just to give a little historical review here, close below retest. And, as I pull up our scanner and what I did this morning, I was trying to pick out some things that maybe some people not should, but could be notified of, that are stocks that are kind of possibly technically getting ripe here. I'm going to kill that, and I'm going to go back to our futures section. Excuse me. I'm going to take off our sorting, and I'm going to take off our futures, and I'm going to go to currencies because that's what we're talking about. And I'm going to look at our EURUSD, and I'm going to see those inflection points. I'm going to see that, as you can see, 122.73 and that 125.06 up top. And here's the 125.74 bottom of the box on the weekly. So as you can see, as we just showed on the charts, we're red across the board, which means we're below profiles on all time frames, and we have those inflection points right in our face. And if we want to get a really quick view of what the landscape is, and we call this our landscape chart for multiple time frames showing all the inflection points, it's a real quick, easy read. And I basically created this for ourselves so we could kind of have some of our traders just kind of be able to. And let me see here. Let me just blow this up so you can see those inflection points in detail on any time frame. And if you want to print these charts out, keep it on your wall. It's kind of a cool thing to do. You can download a JPEG image, a PDF document. Just click that, and what that's going to do is that's going to pop this up in a chart, and you can actually print this out and put it on your wall just to be aware of. And in my opinion, nice little feature there. So again, we're going to take this off and select none. We're going to get this out of the way. We're going to kill our euro landscape chart, and we're going to move on. So we've been talking about this Australian dollar, like what do you do with it now? Here's the weekly again on the Aussie. Had those again breakdowns, retests. A little bit too much noise there on the long term, but again breakdown, close below, retest again, and voila, works out. Here's the situation on the long term, on the intermediate term on the Aussie. We talked about leveraging off the latest inflection point last week, which was 82.56, and we've got a new profile that appeared yesterday, and we just don't want to even get away from the bottom of our boxes here. And remember, just like the Bank of Japan, not in the most egregious manner as the Bank of Japan is just forecasting and letting everybody know their MO there. The Australian dollar, there's just a lot of folks that are wanting this to go down in Australia, and there's government intervention and all that kind of stuff that's probably going to be announced pretty soon on this. And again, they're heavy into mining. If you somehow have been in a cave and don't know that. And natural resources are seemingly getting cheaper, and this particular currency is getting cheaper also. Here's the British pound. Talked about this possibly starting to get back in play here. And again, once we talked yesterday, in fact, about this 155.91 and getting down below there, closing below there. And the British pound, I feel 150 is going to be something we've got to pay attention to as a target on this. And here's the weekly. And we had that 156.05 weekly unfair low combined with our DMZ type area 155.91. And that's been that, kind of multi-time frame confluence, which is also, if I go in our scanner, pick out currencies again, pull this over, I go to our British pound. There it is. There's the inflection points, 156.05 and 155.91 rounded off. Again, stating that these inflection points on the scanner, if you want to pull this up, this is kind of the landscape view here. We crossed that border right in there, and now that's the level of the market, so to speak. Okay. All right. So going down the board, Japanese yen was flirting with 120 yesterday, and now we've got this new profile that's hit here on the weekly as of yesterday morning. We had this showing. Unfair highs are at around 120.42. We've reached a high already this week of 120.24. So getting close to that inflection point on the yen. I haven't been a big fan, as you've been watching this show, of shorting the yen ever. It's always been trying to find support on this particular product, and that's still the game, in my opinion. Here's the unfair highs on the daily, 119.91. So you've got a little DMZ earning right now. So it's either kind of wait for this to break out above the weekly and close above the weekly, or start caving in a little bit below the 119.91 area. And I'm not a big fan of shorting that. So right now it's kind of a wait and see, in my opinion. We've reached some targets. We talked about getting back on the long situation at 118.08. That's worked out quite well, opting out on these shorts down here on the yen. Excuse me. And as we look at the dollar relative to that, looking at our March contract on the dollar index, we've talked about this. We talked about it yesterday. Close above, go back and retest them for highs on the dollar, and just continuing to stay on the long side of this particular trade also. These are just unbelievable moves in some of these currencies. And it's nice to be able to eliminate one side of the marketplace, the short side of this end. So we'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were speaking about the dollar index and just the unbelievable new move up that this product has had. In the end, this kind of looking like it's at some resistance on the long-term weekly, but again, just to reiterate this, we're trying not to take shorts on this particular product. This is more of a profit-taking situation than anything else, in my opinion, on the end, and then kind of a regathering itself, possibly. Looking at this situation we had yesterday, close above, retest, boom, on the daily. So we want to clear that number, which is 120.42 on the weekly, to really start looking at this like it's doing a breakout again on the long term. Just to recap, the pound is, doing what it's supposed to, heading south again. The euro, good Lord, man, just continuing to be the gift that keeps on giving. And what we want to look at on the euro is the major inflection points, 122.73. That's kind of where stops need to be oriented above. And the Australian dollar, I think, is just a hang-on to trade right now. Okay, hold on 2 seconds. Just pulling up something. And as we look at the S&Ps, we talked about not shorting this also around these weekly unfair highs. This is 2072 rounded off weekly unfair highs. We talked about just letting this thing clear again and not trying to use this. Obviously, these are all-time highs again. We're traveling past at this stage. Had about a 100-point rally yesterday in the Dow, and here's the daily. There's zero reasons to get short this, in my opinion, based on the historical references, statistically speaking, towards the end of the year type trade, and also the profiles and things on their highs go higher and actually clearing most of the inflection points here. And I'm going to go back to our scanner and just kind of pull this up. I want to clear out our currencies there. I'm going to go to our futures, the usual suspects of the futures world. Nasdaq travel down. I'm looking for something with all greens, and wow, there it is. The S&P's all green across the board, and the inflection points are sitting here. And here's the landscape chart, real time, the level of the market, real time. And as you can see, the only way you could even start playing around with the short side now is just to get back down below some of these inflection points. And you don't see any new boxes appearing either. So we don't see any yellow grids at the top on any level that would indicate new supply starting to appear here. So again, it's just a tough situation for shorts. At least you know that you may possibly eliminate one side of the marketplace here. So that's the good news, I guess. So we've been talking about getting long from the 1968 area, and we're about 110 S&Ps above there in a matter of less than a week. So that's been relatively decent information to key off of. And here's the breadth situation up top, which is the second part of this scanner. Breadth being positive across the board, and we had that crossover. We had the weekly hang on to positive when we were at the 1968, so we had to take a shot around there. And then the dailies and the 240s and 60s started confirming that move. And here's the really neat thing on the weekly. As we had the crossover, October 17th, we pretty much stayed breadth positive since then. On a long term, I'm going to take out that. But on the daily, which has been a little bit more of an intermediate situation to key off of, we had a shorting opportunity around that 2052 on this contract. And that was around that December 9th, December 10th, just to review that short, and intermediate. And then the crossover that happened. So again, the Shanghai, similar situation. Breadth stayed positive in the long term. We had a little bit of a pullback yesterday and today. But, again, that product is, just things that go up that quick are going to have some volatility, and that's what we've got to pay attention to on the Shanghai. So I'm going to drag this over. I want to also point out going to crude oil here. This is the landscape situation on the February contract. Sitting right there, right above those daily unfair lows, and just be able to paint some of those inflection points for you. Let's see here. Okay. This one in South America is alerting me of something we need to look at. Okay, so here we go. Let's just talk about inflection points on the NASDAQ really quick, and we're going to cover this when we go to break. A lot of guys out there are trading the NASDAQ, and we'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Talked about the NASDAQ before we left on the break here. Here's the situation on NASDAQ. Again, not making new all-time highs on the futures here. Dow, 18,000, I guess, has been hit on the cash. Probably right now, I'm going to pull it up in a second, 43.06 on the NASDAQ right now. There's the 240 unfair highs for day traders, 43.01. And here's the weekly, kind of ignoring that right now. But here's the Dow situation. We don't talk about this a lot. Talked about yesterday, this was kind of a leverage point, 126.06. That's going to be, the uncle point on the 10-year for me for the intermediate trade. But again, we're still in the fair auction sitting here. I have no idea how this thing is hanging in there like it is, but that just kind of tells you that it's probably not the greatest idea in the world to short the treasuries still. Here's the 60-minute. Again, not a big reaction on the downside for that, but we've got the stock market obviously loving the GDP numbers, or durable goods orders. Excuse me, I apologize for that. Got to take a look at gold. And my brother-in-law was even asking me what he owns gold. What do you do there? Here's the situation on the weekly. This got down and touched the major inflection point, 1169, and we've reached the low 1170. So again, hanging in there, popped up. Let me pull this up here. I'll go. Excuse me. Here's the daily situation. Remember those weeklies take precedence over daily over 240 down the line. We always talk about that. And yesterday we reached a low of 1170, 1169. So weekly and for lows, just trying to hang in there. But if that fails, and again, I'm not doing anything with gold until we get back above 1200. And that's what I was saying even to my family members yesterday. And if we can get back into 1152, that may be an opportunity there. But that's going to be pretty damning for the longs, and I would rather see almost some new profiles appear. 1152 is going to be something to take a look at, but 1169. I want this to get out of the daily profiles, and if we can get back above 1200, that may be an opportunity. And a lot of people, say, God, aren't you supposed to buy things that are going down and sell things that are going up? In this instance in gold, I'd rather buy things that are going up and clearing some of the congestion and the balanced areas and getting into the imbalanced situation, hopefully where I can compress my time frames and make a few more points than I would in a fast-moving marketplace. Silver, similar situation, just not real happy with the way that's acting from the long side and really don't want to short it. So, again, that's the situation on silver. Natural gas, I want to take a look at this. This is the February contract. Excuse me, folks. Okay. All right, here's the natural gas situation. Here's the weekly. That close below, go back and retest at 3.949. As you can see, we had the closes below, go back and retest. That's the powerful trade in the long term. And here's the daily situation, that retests and then got actually back down below the daily and for highs at around 3.869, and then the super confirmation getting below profiles, and you see the violent action that happened as natural gas basically fell apart. But what do you do now? I've talked to a lot of people, and it's not out of the question, and I don't look at natural gas that often, but it's not out of the question by them for this to go into the 2 range, maybe just peak down into the 2 range, the high 2s. They're not discounting that whatsoever. And on the short term, here's your inflection points. Let me blow this up a little bit. 3.188 and 3.345 up top. So in my opinion, 3.345 is going to be a selling point on this, to stay with the weak instrument that's proved itself below profiles. Here's the situation. Let me pull up our natural gas landscape chart. Here we go. And as you can see, there's not a lot of reasons to go long this product. The only, in my opinion, if you're going to just nibble, you got 31.88 and 33.45 sitting there as inflection points to pay attention to. But I'd rather just sit on the sidelines on any rallies and just try to wait for it to get into resistance areas, namely on the short term, 3.3452. Okay. Okay, so that's the situation on natural gas. And I want to go into grains really quick because we haven't talked about these in a while and they deserve an update. And let me see if we can get those up here. Here we go. March corn and March wheat. Here's the corn situation. We broke out above weekly up for highs, $33.94 a bushel. That was verified actually also on the daily by getting above 398. So then it was, that powerful move. As you can see, the big day that happened and that's because we got through two inflection points, similar inflection points on two different long-term time frames, dailies and weeklies. Here's the latest on corn. I don't like, from the short standpoint, I don't like the way this thing's compressing into this unfair high at 412. So still, the long term is saying it's okay to be long, not okay to be short on March corn, and the daily, the inflection point here, I'm looking for breakouts here and closes above that 412 area to actually trade this from the long side even farther. And interestingly enough, 413 on the 240. So if we can break through 12 and 13 on the 240s and dailies, I'm going to be interested in buying breakouts here. And right now, this was treated as a profit target in the interim because, we could settle back on corn. There's no mystery about that. Here's the situation on wheat, and we've had some imbalances in wheat lately and basis problems. Okay. Here's the long-term on wheat. Here's the weekly, and we had those breakouts and retests, around 515. We've climbed almost to $7 a bushel the other day. 680 was a high last week. 677. So again, as you can see, these profiles, when we're in a downtrend, then we break above and retest. It's a very similar situation that we looked at crude oil, the euro, the Australian dollar. Close above, retest. Those are things to lever off of and to place stops oriented around those 515 areas in this case. And what do we do now? The long-term trend still is intact north, and we haven't even seen any yellow situations on our bars here, and we haven't, just to kind of bring this out too, here's the long-term, here's the landscape chart, here's the inflection points that I'm currently speaking about. And going into our daily on wheat, here's the inflection points to pay attention to. So you've got a big buy opportunity at 583 down here, and the resistance area around 656. I know that's a huge range, but we're right in the middle of a daily range. The long-term trend's still north. I'm still more apt to buy support. You've got short-term support now at 623, and some profit taken. If you're going to kind of take some short-term profits or day trade, you've got 644 up top as a little bit of a resistance area now, and that's the numbers to pay attention to on wheat. I'm sorry, choose the wrong thing there. Okay, just make sure we're in tune here. Okay, so January beans, here's the situation on January beans. As you can see, close above, retested again, that 974 bushel area, that's held. That's good news for beans. And here's the daily situation. Very similar inflection points that it keyed off of. Let's see if I got any comments here. Okay, and the dailies, you've got 1054, which would be breakouts in beans again, and you've got support around 990. On January beans. All right, I want to come over here, pull up our scanner, and I want to get rid of what we were looking at, and I want to pull up the S&P 500. A couple of stocks may need to be paid attention to here. As this loads, I'm going to pull up a filter. I'm going to look at weekly bottoms here. What's hovering around the bottom inflection point on our weeklies, Caterpillar CAT. We'll take a look at that. It's as of yesterday's close here. That's where we're at on Caterpillar. So let's just take a look at Caterpillar really quick. Just a scanner picks it out. Something we may want to take a look at. Here's Caterpillar on our charts. Here's an inflection point here, 9202. This is obviously being affected again by the dollar a little bit, and okay, and that 9202 weekly combined with, you've got 9340 here on the daily and the breakout. So I think there's a long opportunity above 93.40. You've kind of gotten through the 92.02. 93.40 is going to have to be surpassed to even start thinking about the longs on Caterpillar. But from the short side, I'd like to see this get back down below 92.02. Right now, we're kind of in la-la land up here. And obviously, it's not a strong stock in a strong market. So I think you've got some shorting opportunities below 92.02, and if it breaks out above 93.40, I think we could have some shorts starting to cover this. But again, you've got to look at the dollar, and if you think the dollar is going to go higher, I think Caterpillar may still have some issues moving forward. And I personally think the dollar is going to probably get a little stronger. Halliburton, HAL, I want to take a look at that. HAL. Remember, the breadth on the market in general is still positive. Here's the situation on Halliburton. This is obviously oil-related as heck. Weekly unfurloughs, new box appearing this week, 39.29. So what do? Here's the daily. Sitting right above profiles on the daily. My thoughts are oil's going to go lower. That's going to hurt their business. And I'm looking at selling breakouts below 39.29. It's obviously a weak stock in a strong market, and those are the odds you're always looking for playing the relative strength game. Here's the situation on, let's see here, Michael Kors. Philip Morris, I'd rather look at that. Just kind of sitting right at the precipice of some major inflection points. Philip Morris, I'm going to go into PM. In the vicinity of unfair lows here, 82.73 sitting there, and we've got 83.42 here. So again, this is something I'm going to put on my radar screen. I like buying this above 83.42. Again, the dollar's killing this thing, but we've got to see it kind of migrate above and stay above and close above. That's the situation on PM. Philip Morris, that is. Michael Kors, let's take a look at Michael Kors. We can drill down and find even better setups in this. Here's the situation on Kors. There's the inflection point to pay attention to, 74.32. I'm going to pull up the very long term on this. Just take a look at the long-term chart here. Navigator's starting to try to get back into the above the zero line on the weekly. 72.60 sitting down below, and 70. Okay, I'm sorry, guys. Forgot the inflection point. 74.32 sitting there. So again, this is something that looks like it may cave in one more time, and I'd like to see below 72.60 for any shorting action here, just to get some major confirmation on Michael Kors. Guys, we'll be right back for the last 5 minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. Got about 4 minutes left here, and just wanted to point out these are the S&P 500 stocks that are trading above weekly, daily, and 240-minute profiles. And as you can see, this is a heck of a group that's got a lot of stocks in it. So, and this is kind of proving out some of the breadth numbers here, as you see up top on the S&P. So again, if you want to pick out some of the things that are ultra strong and possibly sitting on some launching pads here, we've got some really good dual time frame lineups going on here, and you can pick out some multi-time frame inflection point lineups, as you can see. And some of the ones that are possibly starting to show some supply areas showing up, Quest Diagnostics. And let me see if I can get this to move here. Quest Diagnostics on a very short term. Good Lord, there's just nothing slowing down here. Whew. Strong. Woo! All right. So I wanted to pull up something, and this, the S&Ps are obviously climbing off that durable goods report. I wanted to pull up something that we looked at the other day, and, just, again, we don't want to leave you hanging after we talk about something a lot of times. This is, we talked about 3 stocks the other morning that worked out perfectly. This is one we talked about yesterday that didn't work out perfectly. So we talked about FedEx, FDX. We talked about an inflection point on the daily, 175.07. and also that in the POC on the weekly sitting there 174.66. Thought that might be a decent opportunity. A stock that got hammered and was coming back up into inflection points. Well, we've rallied from 162 up into 176 in a matter of 4 trading. Actually, is it higher this morning? Yeah, it's even higher this morning. So that's something where we talk about orienting stops around a trade like that, 175.07. It's just something you got to do in case something like this happens, that we, have great, in my opinion, technical setups, and we just kind of blow through them. But that's what stops are for. Just wanted to point that out as we take a look at some of these. Here's Amazon. We talked about this the other day as being possibly a decent shorting opportunity still. And we got back up into that inflection point yesterday again, and we've kind of closed above, crossed the border. This is another one, not too far above the border. But again, the kind of rising tide lifts all boats things that's happening right now with the S&Ps, and you've got to pay attention to that. If you ever do short things right now, you've got to make sure the stops are enforced. So, again, that's the situation. But, the good news is if the market does ever relax, you know that Amazon might be a weak stock in a strong market, and you've got a inflection point and a border there to pay attention to. I want to take a look at something that's off the scanner, CMG, Chipotle. And here we go. So here's the long term on Chipotle. And as you can see, last week we came down into this inflection point. This was one of those ones where I picked out on the scanner. You go in here, you go, okay, the bottom, blah, blah, blah. And you find some things that you want to see happening on a long-term basis on the weekly to pay attention to. And Chipotle sitting here, lows that last week, 632, and that unfair low was 629. Let's call it 630 rounded off. So it got very close to that. Had to pay attention to that trade. Really strong stock in a strong market, and now we've reached some inflection points up top and closed above, and it looks like this thing may actually go higher now. Pre-market, let me just see what we're doing here. Yep, pre-market, we've been as high as 678, back down to 670. Wow. All right, we'll be back again tomorrow, guys. Steve Rhodes is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.